Okay, this video is about the bearish head and shoulders pattern. And this is one of the biggest, most well-known bearish pattern in the market. A lot of traders understand this and know about this. It's been around for a long time. It's something you can find not only on stocks and Forex, but also in market indices and ETFs as well. I want to show you an example of this pattern that we featured in our newsletter back late last year on the NASDAQ. As the name suggests, a bearish head and shoulders pattern has a left shoulder, a head, and a right shoulder. That's why they call it the head and shoulders pattern. Okay, normally you have an uptrend leading into the pattern. So from here in this chart, you can see in August, we had those lows and then an uptrend, short-term uptrend that led us into the highs here in December. First of all, the left shoulder is formed, so we get a rally that leads to a high and pullback to what we call the neckline. And then we get a second rally. You want to see that on lower volume. It doesn't have to be, but it's better if it's on lower volume. And then another pullback to the neckline. We can see that here in early December. And then you can see a third rally that's lower than the head and ideally lower than the left shoulder. That's the best case scenario. And then after that, the stock pulls back or index pulls back and then closes below the neckline. Now that's the entry point. So this is a short pattern. In other words, you enter a short or short the Qs in this case, most likely. And then hopefully it will resolve downward, and the target on this pattern can be derived by taking the distance from the neckline to the top of the head and then projecting that down below the neckline, so from the neckline where it breaks out. Okay, you notice this pattern, it's sloping downward, so the overall pattern is kind of leaning to the right and that neckline is sloping downward. That's the ideal situation, the ideal type of bearish head and shoulders pattern, but it doesn't have to be that way. It can be either horizontal or it can be even upsloping to some degree. But this isn't the ideal case. Okay. One reason why we notified subscribers of this pattern were very bearish at this point was because we also had a bearish confirmation signal in the overall market in early December. So it's good to find other fundamental factors and other technical factors that let you know that this the price of this index or the stock is likely to go lower. So other bearish signs, okay, and that helps. So we can see that the target entry point was here, the close below the neckline in early January, and then shortly thereafter it reached the target within a week or so. Okay. Now the target in this case, because it got off to such a good start, you could have said, okay, let's see if it can go to the next support level. So you could have taken part of your position off at the first target and then kept some for just above this low here in August, and that that would have worked out really well. So if you get off to a really strong start with the trade, think about completing the trade at a support level below the target, or a little above there actually. So yeah, that's the bearish head and shoulders pattern. We had this on our newsletter. It helped us to realize that we were likely to have a sharp pullback in early January. Oil was turning over and showing bearish signs at the time too, and it was a pretty high probability trade at this point to pull back. So we find these patterns all the time throughout the year in our newsletter, and we normally don't go bearish, but if the overall market is in a downtrend or showing bearish signs, then we do have good trading setups, and you will see this pattern come up in our newsletter. Show you the full chart here on stockcharts.com. If we look at that, again, bearish head and shoulders pattern here, this is where it was setting up, and then if we change the dates, we can see where this bottomed, and it bottomed in the middle part of February and started to rebound. So another good entry point on this pattern in some cases is a retest of this horizontal, or in this case downsloping neckline. Okay, so if the NASDAQ comes back up, which it's doing now, and if you extend this line off to the right, if it touches that line and rejects it and starts pulling back hard, from there that might be another good entry point on this pattern. So you could also short at the top of the right shoulder or near the top of the right shoulder. However, that's going to yield more losing trades because it's possible, very, very possible, that the price could go through the head at that point, and it's just tougher to nail that ideal entry point if you don't have a confirmation of breaking this support line here, okay? So keep that in mind as well. Okay, I just want to point out before I end this that we are members of the Better Business Bureau. We have an A+ rating with them. We offer a free blog at Tradetobefree.com, and we find these type of setups throughout the year, mostly bullish, but some bearish setups like this in our newsletter, so you can take a free trial over there. And please subscribe to our YouTube channel and like the video if you learned something today, and I'll see you next time.